you can get twice the returns of the total S&P 500 market if you follow these steps. Hey guys, thank you for tuning in. My name is Khan and you are watching Passive Earnings. In this video, I'm gonna show you a simple strategy and that I've been covering on this channel for a while now that includes a year's worth of return in 6 months or 2 years worth of returns in 1 year. Meaning if S&P 500 has been returning almost 10% per year for the last 100 years or so, with this strategy you can make 25% or 200% gain of that. So 25% versus 10%, take your own pill. Of course, every strategy in options trading comes with the risk, so this also has some risk, but the risk here is very minimal, and I'll show you the risk as well before I show you the actual thing and how you can achieve that 25% a year return on your investment in the stock market using blue chip stocks. So if you're interested in that, stick around. I'll show you guys everything that you need to know to achieve that 25% return on your investment. So first thing first, I'll just focus on my current portfolio. I am almost hitting $225,000 this year for one of my portfolio that you are seeing here that is hosted on Robinhood. Robinhood is one platform that I personally think is very easy to show options trading on. So that's why I have created this portfolio here. Just a few months back, 3 months back, I was down and under 21%, and my this same portfolio was at $165,000. But with the market recovering overall and me applying some strategies with options trading, I'm now over $224,000. So now let's talk about the strategy that I want to discuss. So first thing first, market has, as I mentioned, returned 10% a year for the last 100 years or so. But you want to beat the market, and it comes with risk. So you want to have 25% return on your investment. How you can achieve that is through simple strategy of covered calls. So what I mean by that, I'll show you the numbers, I'll show you the stats and everything else. And trust me when I say this is something that I'm personally looking into. And I think that this personally would help me make a lot of money in the coming year. But at the same time, I am highly against trading with your money, playing with your money like you are gambling. And that's why I am myself learning trading here on Thinkorswim as well. If you see here, I have executed a paper trade account where I am up $3,600 on a $100,000 investment in just a day. But point being, I'm myself a student and I'm learning that. But with this simple strategy of selling covered calls, you can actually make 25% return on your investment every year in the bull market. Of course, if things go down, then you are holding a knife that is a falling knife, basically, right? So you are holding a stock that is going down in the value, but at the same time, you can still make 25% with this strategy. And the risk here is that you won't be able to catch the upside. So if you get over 25% return in the market, you are basically capping your upside to 25%. You can get, but you won't be, and that's the risk involved here. So that's the risk. Once we have that out of the way, let's jump right into the numbers and stats, because that's what I really want to show you guys so that you can concentrate on the big win that you want to see here. So say, for example, let's talk about Apple stock. And I was doing this before I recorded this video. And what we are trying to do is, if you look at Apple, you are seeing a year-to-date return of negative 14.63, almost negative 15% return year-to-date. And in an environment where S&P 500 or SPY is up, it is up almost 8%. So Apple is down. Also, this is one of the worst case scenario that I'm focusing and showing you guys, because in a bull market, when other shares are going up, this will make you even more than 25% return with this strategy. But let's stick to 25% return, and let me show you how I do it if I were to do it right now. So I have so the Apple stock currently is listed at $212.45. Let's call it $212 even. So what I'm gonna do, say for example, for this strategy, I'm gonna buy 100 shares. In this scenario, I will have to pay $21,240, and for 25% return of that comes out to be roughly an additional $5,000, close to $5,000, right? Meaning that would take our total to $26,000. So we want to make in 1 year $26,000 with the 100 shares that we have, right? That's the goal. So what would you do is the first step. What I would do is the first step is to come here, buy 100 shares of Apple, and get that assigned or get those 100 shares at $21,200 total price. Now, what I'm gonna do next, and this is the most important step, is you're gonna come here and you're gonna sell a call option. And what you're gonna do is go a year out, because that's what we are planning, right? So technically, it's not even a year. So on June 18th, this call option will be expiring. What I did here is I asked ChatGPT that what is the total return of 25% return on $21,000. So it comes around $26,000 overall. I'm just giving you a rounded number. So 26,000 is what we want to achieve. Now, with $26,000, what the current price is $212, meaning $21,236 for 100 shares, right? So for 100 shares, we want to sell these 100 shares as $260 basically, right? So what we want to do is we want to go up here and see adding this number to the strike price that we are selecting. So say for example here, $740 plus $255, that comes out to be, let's do the math, easy math it is for me, but just want to show the numbers. So 255 plus $7.40 will give us a total of $262 per share, meaning you will hit that 25% mark with this strategy. So $26,240 will be paid to you for this strategy at this price if you sell 100 shares at this price. So that's exactly what we're going to do. We're going to buy 100 shares at the current price, and then we're going to sell it at this price. So now if the price goes above $255, you will start losing money. So it's not technically losing money, but basically what you are doing is you are telling that you just want to make an additional an additional money from 212 to $260 per share. So that's that's the maximum profit that you want to get for selling 100 shares. And that is there all there's to it. It is so simple yet so effective that you can literally define your risk. And say for example, if you see a stock that has more upside, so say for example, I'm really bullish on Apple and I still want to make over 225% return. So what I would do is I'm not going to sell less than 260. So let's say I'm willing to sell my 100 shares by next year on June 18th at $260 per share price, and I'm currently getting them at $212 per share. So I will make 260 plus 6.25 per share, so that is $266.25. So $266.25 per share times 100, $26,625 for 1 year on your investment of $21,209. So that's an increase of over $5,500. And I think it's not a bad return at all by any means in the stock market, because that's literally you have to do it once in a year and then you set it and forget it. If the strike price, if on June 18th, if the price of the Apple share is above $260, you would still have to sell it at 260. So you know what are you getting into. You know what price you're gonna get by selling these shares, but at the same time you are locking in these profits for a whole year. And if the price is below $260 on June 18, 2026, you would still get to have that money tied in with Apple stock, and you can again sell a call 1 year out with another strike price that you feel comfortable with, or again 25%. Just before ending this video, just want to show you guys one crazy example of MicroStrategy. Why MicroStrategy or strategy is because this is highly volatile stock, and the premium here are really juicy. What I mean by that, let me show you. So you get 100 shares for 39,000, almost $600. So 39,600 is your estimated cost. Call it even $40,000. $40,000 for your 100 shares. Now you want to make 25% return. So 40,000, a 25% return of on $40,000 is $50,000, right? So 50,000 even. So now what you want to do is you want to sell a call going out almost 1 year, and then look for a price where you are getting a return of $50,000. So so if you look here, just right here. So even if I sell my shares right above 410, right around $420 per strike per share, $420, right? So we want to hit $500 per share. So 420 plus 85 equals to $505. And times 100 would be the total 100 shares of one contract. So 50,500. You would want to invest 40,000 and you want to make 50,000, and that's how you're going to make it. You can literally sell an option that is just like $25 above the current price, and you would be able to generate you know 25% return on your investment within a year. And there's highly likely that this gets executed. Why I'm saying that? Because of the delta value is, in simple terms, probability of how much that the value of this stock could go to this price in 1 year on the expiration date that you select. So there's 60% or 0.60 in terms of percentage, 60% chance of this getting executed. So if you want to take the juicy return, you can go literally at the 500 price. So you'll get 500 plus 60, so that'll be $560.70. So you'll be making $56,000 on your almost 40,000 investment. So that's like 56,000 return, like 16,000 profit on a $40,000 investment over 1 year, and you don't have to lift a finger after executing this. So that's the strategy that I'm really looking into. Doesn't require any extreme timing, or you need to spend a lot of time to get that kind of return or anything like that. But it requires your conviction and conviction that if the stock price fell down, you would still be buying more of that share or more of that company. So that's about it. I really hope this helps you make some money out there, and I'll see you guys on my next video. Please leave me a comment telling how do you feel about this video. I really want to help you learn something new. This is very simple strategy, and I think anyone can do it. Just be careful with your money. This is not a financial advice, but at the same time, I want all of us to make money in the market. Thank you so much, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.